All right, so it is 2:02. We're going to go ahead and get started. Hopefully, if anybody else is jumping in late, they won't miss too much. So thank you guys so much for being here today. My name is Sara Lorenzen, and I am an outreach specialist for the Oklahoma State Regents for Higher Education. I work specifically with two programs that the Regents has, which is a program called Oklahoma Money Matters, which is all about financial literacy, and Ready, Set, Repay, which is all about student loans and student loan repayment. So today we are going to talk about public service loan forgiveness. Before I get too deep in, I do want to say thank you to Citizen Potawatomi Nation for having us repeat this workshop. We enjoyed doing this the first time, and I'm glad to be able to have a chance to do this again. This is the fourth and final in our summer series that we've been doing. If you were with us for the last couple of weeks, we've talked about OK College Start and how you can use that to kind of find a career and find a college that fits for you. We talked with my colleagues from Reach Higher, the Adult Degree Completion Program. Last week I talked about Fund Your Future, and I talked all about different ways to fund your college and smart student loan borrowing. And then this week, like I said, we were talking about public service loan forgiveness, kind of what that means and how you qualify, and some tips and tricks to help you, be able to get approved and kind of avoid being denied as sometimes that happens with this. So what I'm going to do is I am actually going to play this video for those of you who are not familiar with what public service loan forgiveness is. This is a really quick snapshot from studentaid.gov that talks all about the program, just the very basics. So I'm going to play this for us so we have kind of a baseline of understanding of what this program is, and then I'm going to get into kind of the nitty-gritty little details and things.
If you work for the government or a nonprofit organization, you may be able to qualify for Public Service Loan Forgiveness, or PSLF. Public Service Loan Forgiveness is a government program that erases the remaining balance of your student loans after you've made 120 qualifying payments. The payments don't have to be consecutive. You can track your payment count every year by submitting an employment certification form. While you're working toward public service loan forgiveness, you should submit an ECF every year and every time you change public sector jobs. Filling out your ECF annually is the best way to verify that you're on track for PSLF. To help you fill out your ECF each year, we've created a new PSLF tool. Our tool will assist you in completing your part of the form. Afterwards, print it out, get your employer to sign it, and send it. And don't forget to save a copy. We'll review your ECF to make sure you meet all of the program's qualifications. The first Public Service Loan Forgiveness qualification is about who you work for, not about what you do. Qualifying employers include these government and nonprofit organizations. To make sure your employer qualifies, submit an employment certification form every single year. This is a critical step. The second qualification for public service loan forgiveness is loan type. Remember, direct loans are the only kinds of loans that qualify for PSLF. If you don't have direct loans, you can consolidate some types of ineligible loans into a direct consolidation loan to qualify. The third qualification for public service loan forgiveness is your repayment plan. These plans are based on your income, and they're the only plans that qualify for PSLF. If you're on any other plan or just starting repayment, switch to one of these plans to ensure you'll qualify for forgiveness. The fourth qualification for public service loan forgiveness is all about your payments. Remember, you must make 120 qualifying payments to qualify for PSLF. So make your payments on time, every time, and follow all the requirements throughout the repayment process. Here's a quick checklist to recap the basic public service loan forgiveness qualifications. Most importantly, and we can't stress this enough, submit your employment certification form each year. This is essential. You most likely won't get forgiveness without doing this. For more information, visit studentaid.gov.
All right, so now that that is done, let me kind of get into some details about this. So as you saw, there are some qualifications that you have to meet in order to qualify for public service loan forgiveness and get your student loans forgiven. So let's kind of go over those in more detail before we move forward. The first is your job. You have to work full-time in either a government, not-for-profit, or in something like AmeriCorps and Peace Corps. Now, things like public education or public colleges do usually count. To find out for sure if those things count, you would need to submit an ECF and have them verify that that does count. But usually they do because it's considered a public service and it qualifies like government would. And when I say government, that means any level. So US federal, tribal, state, and city all count. You have to have direct loans. So there are many different types of student loans out there, and I'm going to talk a little bit more about the different types and which ones count, which ones don't here in just a second. But you have to have direct loans because that is the only program that those count towards. You have to have income, be repaying on an income-driven repayment plan, and I'll go over here in a little bit exactly what those are and kind of the differences between them. And then you have to make 120 qualifying payments. So that is 10 years of qualifying payments. The good news is that doesn't have to be consecutive. So if you worked a nonprofit for 2 years and then you went to a for-profit job and then 3 or 4 years down the road, you switched back into a public sector job, like working for the government or back into nonprofit, that time that you were not doesn't break up. Like you don't start back over at zero when you leave a nonprofit job. So those payments though have several stipulations to be considered a qualifying payment. The first is they have to have been made after October 1st, 2007, when this program went into place. It has to be on a qualifying repayment plan, as I've mentioned. It has to be the full amount due. So if your monthly payment that you are making every month is $300 and you're paying $350 because you're wanting to get a little bit ahead, that puts you in what's called paid ahead status. So that actually causes your payment to not count because it's not the exact payment that they're expecting. Also, if you pay less than that, without talking to them and getting them to change your income-driven repayment plan and resubmitting your income, that also will not count as a full payment. It can't be later than 15 days past due. So if your payment is due on the 1st, you cannot pay it past the 15th of the month for it to still count as an on-time payment. You can't be in deferment or forbearance. So I actually ran into this myself. I worked at a nonprofit while I was in grad school and didn't realize that my loans I obviously put my loans in deferment because I was in the middle of going back to school to get my master's degree. And I lost like 1.5 years worth of payments because I was in deferment because I was in grad school. So just sort of be aware that if you were still working in a nonprofit while you've had a deferment or you've had to get a forbearance for one reason or another, that those payments do not count. Now, I will qualify that statement a little bit more to say that right now, everybody who has direct loans has their payments in forbearance, and that is because of the CARES Act. And per the CARES Act, all of the payments that are in deferment right now, those will count still if you are in the Public Service Loan Forgiveness Program. And those are the only forbearance payments that will count. As I mentioned earlier, you can't be in a paid ahead status. So if your payment is $300, you need to pay $300 and not a cent more or a cent less to make sure that those count. And as I also mentioned, they don't have to be consecutive. So if you had a job change and you went to for-profit for a little while and then you went back into working in the public sector, the time before you left to go to the private sector and the time that now you're back in the public sector, those times should still count as long as you're full-time and meet all of the other requirements. All right, so let's talk a little bit about the difference in loans. There are two different main types of loans. And if you're on my Fund Your Future or any of the other times that I've discussed loans in this series and the series previously that I did with Citizen Potawatomi Nation, you know, there are two different types. There are federal loans and there are private loans. And this slide will probably look familiar because it is the same one. Repayment starts on a federal loan after the student has graduated or dropped below half time. They're always fixed rate. They don't fluctuate. The government sets what that rate is when you take the loan out, and it stays that way for the entire length of the time that you have the loan. They don't require a credit check unless you take out what's called a plus loan, which is going to be either a parent loan or a graduate student loan. Those generally require a credit check. There's several repayment options for these, and they've got benefits, things like deferment, forbearance, and they're also eligible for the federal forgiveness programs as well as cancellation programs for things like disability or if you pass away, or you know, there's several others. There's teacher loan forgiveness and some other options. So now we talk about private loans. So with private loans, they may require payment while you're in school, depending on who your servicer is. They can have variable interest rates, and sometimes they are higher than federal loans. Now, right now, I caution people because of everything going on with the pandemic and everything else, interest rates are very, very low right now. So you'll actually probably find lower interest rates on the private loans. And if consolidating or doing something like that actually works better for your situation, then that's a great option. I just always caution people that unless you just happen to luck out and find a private student loan option that has forgiveness programs of some sort, you lose benefits of things like income-driven repayment, you lose forbearance and deferment, and you also will lose any cancellation programs like the death or disability cancellations that come along with federal student loans. Also, these generally do require a credit check and or a cosigner if you don't have credit. And then usually they don't have flexible repayment options, at least not to the amount of flexibility that a federal loan will have. And I'm sharing this because, like I said, you have to have direct loans in order for those to qualify for public service loan forgiveness. So if you have one of these other types of loans, those are not going to qualify. So let's talk about the steps that you have to take here. So if you are wanting to apply for public service loan forgiveness and get this process started, let's talk a little bit more in depth. The first thing you need to do is you need to submit the Public Service Loan Forgiveness Employment Certification Form. You can find this on studentaid.gov. I've actually got a link to it kind of later on in the presentation that I will make sure to send around to you. And what that does is you have to go through every employer that you think will qualify, and you have to fill out your information and get that employer to sign off on it. And then you need to send in all of those forms. Once you send in all of those forms and they've reviewed everything, they will update you with, yes, you have 120 payments, or you have 16 payments that qualify, you have 25 payments that qualify, and you have to resubmit that every single year. So once you've submitted those and they've received them, they transfer your loans over to Fed Loan Servicing, who is currently the provider who takes care of everyone who is on track for public service loan forgiveness. You have to resubmit your ECF to them every 6 to 12 months. And what this does is it goes in to make sure you're still working at the job that you were working at when you last submitted, and making sure that those payments still qualify, that you're still meeting everything. And it tags those payments So whenever you get to the point where you are at 120 payments, it is tagged all of those, and there's no confusion as to whether or not those 120 payments qualify or not. Once you hit 120 payments, then you're going to submit the actual application. If you submit the application before you hit 120 payments, you're going to get denied. So make sure that you have all of these 120 payments before you submit the application. You can also get that on studentaid.gov. They've got a whole tab about public service loan forgiveness where you can download all of these forms. Once you've submitted the application, review it, they will send you a letter that says either yes, you've been approved, or no, you haven't. If you've been approved, what will happen is they will forgive the remaining balance of your loans, and any payment that you've made above that 120 payments will be refunded to you at that point once they have decided that yes, your loans qualify. Public service loan forgiveness is not taxable. They do not tax the forgiveness. Unlike some of the income-driven repayment plans, where after like 20 or 25 years, they will forgive your loan balance. In the case of those repayment plans forgiveness, that is taxable. I always like to mention that because there's a lot of confusion around it, and a lot of people go, well, public service loan forgiveness is great, but I don't want to get taxed on that amount. If you get public service loan forgiveness, you will not be taxed on that amount. And then if for whatever reason you're denied, they will go in and tell you why, and they'll give you next steps. Now that may mean you still have more payments that need to be taken care of. That may mean you need to go back and talk to the servicer and verify payments. You know, I've seen people who have submitted, you know, freedom of information requests from their servicers to get, you know, proof of all of their payments to help with that. It may be as simple as you were on the wrong repayment plan for a while, but you qualify for the next step, which was the temporary expansion. And I'll talk about that here in like a little bit. That was passed shortly after people kind of started hitting the 120 payments and then realized that they didn't qualify because there was some confusion around it. So let's talk about those different types of loans. A direct subsidized loan is going to be a loan you would have gotten in undergrad for need-based. It is basically what it means is that while you were in school and while you were on any kind of deferment, the U.S. Department of Education is paying the interest on those loans. So you're not accruing interest on those loans if you have a subsidized loan. The only time you then start with interest is once you start repayment. So once you've graduated, you enter your grace period, and then you enter repayment. At that point, you'll start acquiring interest on subsidized loans. On the opposite side, there is direct unsubsidized loans, and those are loans that were not need-based, but were offered to undergrad and graduate students. The borrower is responsible for all of the interest on the loan. So while you're in school, even if you're not making payments on those, you probably were getting interest charged on those loans. And if you didn't pay it while you were in school, it then capitalized once you graduated or dropped out or you know, ended up below half-time. And if you didn't pay that interest, it definitely did make your loan balance go up a little bit. All right, and then there's direct plus loans. These are non-need-based loans. These are for parents of undergraduate students, but then also for graduate and professional students. And the graduate and professionals take them out for themselves. These do require a credit check, and the parent, in the case of taking it out for an undergrad, or the graduate student are responsible for that interest. There's no subsidy on that loan. You get charged interest from day one. And it is the only federal student loan where they require a credit check, and that is because it is above and beyond the loans that you need to take out, that they offer to need-based students. Now, these three loans, these three types, are the ones who qualify for public service loan forgiveness. I'm going to go in to talk about a couple that you may see that don't qualify, and we'll also talk about kind of what you can do to try to make them qualify. So the first is federal Perkins loans. This program actually ended in 2017, but if you graduated anytime before 2017, there is a possibility that you may have had these loans. The borrower was not required to pay interest while they were in school, like a subsidized loan. But it was a very low interest federal loan for undergraduate and graduate students who had exceptional financial need. These Perkins loans are not eligible for public service loan forgiveness. However, there is a program out there called Federal Perkins Loan Cancellation that is out there. If you have those loans and you're interested in looking that up, you can find that at studentaid.gov. And then there are federal family education loans, or FFEL loans. This program ended in 2010. This was a program that worked with private lenders to provide educational loans for students that were guaranteed by the government. They looked like federal Stafford loans, subsidized and unsubsidized, and some PLUS loans. These FFEL loans are not eligible for public service loan forgiveness. Now, this is something kind of an issue I ran into in my own trying to pursue public service loan forgiveness. When I was in grad school, I went to grad school from 2009 to 2012. I took the long way because I was going half-time. And I noticed that probably half of my loans were FFEL loans. So when I really seriously started pursuing public service loan forgiveness, I had to go and consolidate these loans into a direct consolidation loan. Now you can do that very easily through your servicer. And I'll talk a little bit about that here in a minute, how you can do that. But the thing I would caution is if you have already done your 10 years or you're starting to get close, be very careful, because when you consolidate loans, you start over from zero. So it may be if you have a group of direct loans and then just one FFEL loan or 2 or 3 FFEL loans, you may just want to consolidate the FFEL loans into a direct loan and leave these alone. Because those already do qualify, and you will lose any payment time that you have made on those direct loans that already do qualify if you try to consolidate all of your loans, the direct and the FFEL together. And you can also consolidate your Perkins loans into a direct loan or with your FFEL loans to make them qualify. But again, if you consolidate it, just be aware that you start your payment count over from zero whenever you take out a new loan. Okay, so this is just a brief overview of the different repayment plans that you can get for your federal loans. There's the standard repayment plan. That's the one we always hear about. 10 years, you pay less over time because you're not getting charged as much interest. But it does not qualify for public service loan forgiveness. There are graduated repayment plan, which is you start with very low payments and then it gradually increases as, in theory, your income increases with your experience out of school. It still takes 10 years to repay those. You will pay a little bit more over time because you are having the interest accruing over time. And those do not qualify for public service loan forgiveness unless you qualify for the temporary program, which, like I said, I'll talk about more here in a minute. There is the extended repayment plan, which these are fixed and sometimes graduated payments. You pay them over the course of 25 years. They are only eligible for people who have more than $30,000 worth of student loan debt. They do offer lower payments than paying the standard repayment plan, especially if you have a large amount of student loans. You will pay more over time, but in theory, it should make it a little bit more manageable to pay those loans off. But extended repayment does not qualify for public service loan forgiveness. And there's revised pay as you earn. It is 10% of your discretionary income. So you have to recertify every year to your servicer. You have to resubmit your tax returns, W-2s, things of that nature to prove what your income is. And then they will set your payment to be around 10% of your income every month. And it's aimed to make it a little bit easier to handle. Now, I also caution people with this plan, because this is one of the plans that qualifies for public service loan forgiveness. You will pay more over time. If you are married, your spouse's income does count in this calculation. So if you have a spouse that makes a lot more money than you, this can sometimes cause problems for people. Generally, what I've seen a lot of people do, and this is not me recommending this is just me throwing this out there. I have seen some people who will file their taxes married but filing separately. And that way they can submit their taxes separately to help keep that cost down. I am not married, so I don't know if that actually works or not, but I know of several people that have filed it that way. With revised pay-as-you-earn, if you don't qualify for public service loan forgiveness, that balance is forgiven at 20 to 25 years of repayment, but the balance is taxable after it's been forgiven. And then there's pay-as-you-earn, which is very similar, but it requires a really high debt-to-income ratio. It is still the same 10% discretionary income, and it has an annual recalculation. Same thing as revised pay-as-you-earn. Spouse income is included. You're going to pay a little bit more over time because of interest, but the balance will be forgiven after 20 years. And if it is not forgiven through public service loan forgiveness, that balance that is forgiven is taxable. I share these two because revised pay-as-you-earn and pay-as-you-earn. Pay-as-you-earn was the original program, and it was a little bit harder to qualify for because you did have to have a really high debt-to-income ratio to be able to qualify for it. So they changed it a little bit and added revised pay-as-you-earn. So it's a very similar program, but it's a lot easier to qualify for. And then there's income-based repayment, which I think for most people is the most popular one that people get on. It requires a high debt-to-income ratio. You will pay 10 to 15% of your discretionary income every month. They do recalculate annually. It does include your spouse's income. And then if you don't qualify for public service loan forgiveness, as long as you've been making your payments for 20 to 25 years, the balance is forgiven but is taxable. And then there's income contingent repayment, 20% of discretionary income or an amount that pays the loan at a fixed rate over 12 years. Annual recalculation on this one as well. Spouse's income is included, and then the same thing, 25 years. And then there's income sensitive repayment. That is going to be based on your annual income. It is a repayment plan that gives you 15 years to pay. And the formula of how that's taken care of varies between lenders, and it's only available for FFEL loans. So it would not qualify for public service loan forgiveness because FFEL loans don't qualify. So just to kind of put it here so you can see, revised pay-as-you-earn, income-based repayment, and income contingent repayment are the 4 plans that qualify. So if you are not on one of these repayment plans and you're wanting to pursue public service loan forgiveness, you need to submit to your servicer. You need to submit to get yourself put on one of these plans. They'll have you verify your income, they will recalculate your payment, and then you will make that payment every month to make sure that those payments are qualifying. We talked a little bit about deferment or forbearance. Your loans, if they are in deferment or forbearance, unless it is right at this moment in the forbearance for COVID-19 with the CARES Act, they do not count, even if you're making payments. Like if you are in a forbearance, but you're still making a payment towards your balance, those payments still don't count because you're in forbearance or deferment. So just be aware that if you have to take a forbearance for whatever reason, I know like one year I had to take it for a month because I forgot to resubmit my income-driven repayment, and they tried to put me back on standard repayment, which was way more than I could afford. And so those little months here or there that you have to do that, those do not qualify. So at this point, before I move forward, does anyone have any questions? You're welcome to pop them in the chat or unmute yourself and ask away. Okay, I guess we're good. So let's go ahead and move on. Okay, so we want to talk about kind of how you can look for your loans and figure out if you qualify or not. So our first step is going to be going to studentaid.gov. When you go to studentaid.gov, this is what the page is going to look like. And it's going to have a button that says log in. When you log in, it's going to show you all of this information. The first thing you're going to do is you're going to want to verify your repayment plan. And if you're not on an income-based repayment plan, you're going to want to get on one. So you'll see where I have circled in red here. This is where you can estimate your monthly repayment plans, and you can see what your approximate payment would look like on all of those. So you'll click on that, you'll go, I want to find the best repayment strategy. And then it's going to ask you a bunch of questions. So it'll ask you if you have a job, if you filed taxes, if you have children, if you are saving for retirement, just all kinds of different questions. And then it's going to prompt you to answer more questions based on what you've answered here. So in this case, we are filing single, we live in Oklahoma, and then you'd go in and you'd put in your annual salary. And then if you expect to get a raise this year for cost of living or whatever, you would put in whatever that percentage is. And then it's going to show you all your current loans. So it's going to say you have this many subsidized loans, this many unsubsidized loans, this many Perkins loans, if you have Perkins loans. And it also lets you add in your other loans that you may not have on here, so you can total them all together. And then it's going to ask you if you're interested in public service loan forgiveness. This is really important to check if you're looking for public service loan forgiveness, because it will only recommend plans that allow for public service loan forgiveness. If you don't click this, it will give you all of the plans, and then you might end up getting on a plan that doesn't apply, and then you've kind of wasted your time having to go through this. So make sure, very, very important, make sure that you hit yes if you are interested in public service loan forgiveness. And then you'll say, pay off my loan as fast as possible, have a low monthly payment, pay the lowest amount over time, whichever one sounds better to you. I generally, because you're trying to get public service loan forgiveness, would have a low monthly payment. And then it's going to suggest a repayment plan for you. Now, whenever I did the screenshot, I put in, I think it was like $12,500 in loans. So this is going to look a little bit different than someone who maybe has $100,000 or more in student loans, or even, higher 5 digits, $50,000, $60,000 in loans. But for this person that we put in, it came back and it said, based on what you've put in, we think that income contingent repayment is the best option for you. And here's what that looks like. And it gives you the monthly payment, the total that you will repay over time, the estimated payoff date, as well as if that loan you will qualify for public service loan forgiveness, roughly the amount that will be forgiven. Now, if you want to take that and go, great, let's go and apply for that, that is great. But also you can compare the plans. And this is really important because sometimes when you are looking at these, it may not be exactly what you're looking for. So in this case, it suggested to the person that I was putting their information in, it suggested standard and graduated, which they still had the options for. But then as far as getting the lowest payment over time, it gave them the option of revised pay as you earn or income contingent repayment. And you can kind of look here as far as what they were looking at, what forgiveness. Now you see here, revised pay as you earn would not have been the best option for this person. So they were right. Income contingent repayment would be the best. So then you would go in and you would submit your income-driven repayment and ask to get put on an income contingent repayment plan with your servicer. So once you've done that, and these are kind of your steps to start today, you go to studentaid.gov, and you can do that right now. You can wait until after we get off of this call. You're going to log in with your FSA ID. This is going to be the same thing that you do if you are on an income-driven repayment plan. It's the same ID you sign in with every year. Also, if you filled out a FAFSA, this is going to be the same information. If you don't have that, then you can go back in and reset it. It's not that complicated to reset it through their website. You're going to want to utilize the PSLF help tool, which I will talk about here in a minute more what that looks like. That is on studentaid.gov, and it helps walk you through the type of loans you have and whether they qualify or not. And it helps walk you through your payment plan to make sure that everything that you are using qualifies. If you have FFEL loans or Perkins loans, you can look into consolidation. You know, I mentioned before, I had this issue with my own. I had probably about half of my total loan balance that were in FFEL loans. So I consolidated those into a separate loan. And now when I look at my balance, I have my consolidated loans are about a year behind my other loans, but they're still on track now. So you can go in and change that. It's not, you know, completely hopeless if you have FFEL loans and didn't realize that you do. If you meet all of those requirements and think that you do, print out those ECFs and submit them to your HR, get them to sign off on them. And the first time you submit them, you will have to submit for every employer that you think qualifies. So for me, that literally meant tracking down employers that I was working for back in 2007 and 2010, and getting them to sign off on those when I very first started. But now that I've been in the program for a couple of years, all I have to do is go in once a year, or if you change jobs, and have your employer sign off on the form for that employer and then submit it every year. All right, so now I'm going to talk a little bit about Public Service Loan Forgiveness Help Tool, and kind of show you what that looks like. So on that same screen where we went in and we changed our income driven repayment plan, down at the bottom, you can see where I have in red, it says use PSLF help tool. So you'll go in and you're going to click on that. What that's going to do is it's going to ask you about your employment. Who do you work for? And then when you hit continue, this screen is what you're going to get right now, because if you have direct loans, they are all in forbearance because of what's going on. Normally when you see this screen, what this will look like is it will say all of these loans are direct loans and they qualify. All of these other loans do not qualify. And then it'll give you some options that you can consolidate them or not. But right now, just be aware when you're using this help tool that this may be the screen that you get. And it's not that there's anything wrong, it's that everybody is in forbearance right now because of what is going on with the CARES Act. All right, and then you're gonna go in and it's gonna ask you to add your employers. So you're going to say, I work for a government organization, and then it's gonna ask for their employer ID number. It's gonna ask for the name of the organization on your W-2. Most of that information is on your W-2, but if you don't have it, you can just ask your employer for it. Usually HR will have that information. It's gonna then ask you for all of the contact information. Are you still working for this employer? If you stopped working there, when did you stop working there? Are you full-time? And it will do that for all of your employers. You're gonna make sure you add every single one. So the first time you do this, if you have 6 employers that you think are gonna qualify, you're gonna fill one out for all 6. And then what it's going to do after you've inputted all of that information, you hit proceed with generating an employment certification form. And when you hit continue, it's going to generate employment certification forms for all of those for you. So now you're not going to have to go in and manually fill out all of that information. All you'll have to do is take the couple of pages for that one employer, take it to the employer and have them sign it. And then either stick it in the mail or fax it. Depending on your servicer, now that I am with my Fed loan or Fed loan servicing, now yearly when I resubmit it, all I have to do is scan it and upload it online. They make it very, very easy. And then it's going to ask just for your personal information. This helps with the generating your ECFs for you. And that way you don't have to fill out all of your personal information in those forms. Okay. And I'm sharing this. This is a screenshot of what the employment certification form looks like. And I share this because you'll see in a minute, whenever you have the application and the employment certification form, they look scarily similar. And I say that because I've even downloaded the wrong one before I knew better. You'll see up at the top of this one, it says very plainly up at the top, employment certification form. Make sure it says that and not application for forgiveness when you very first try to submit this. All right, and as I mentioned, once you have submitted those, they will transfer all of your loans over to Fed Loan Servicing from whatever servicer you have, whether it's Great Lakes or Nelnet, Navient, whoever you have. And then once they have gone through and qualified all of your payments, so they will go through and they will verify that all of the forms you've submitted, what payments qualify, what payments don't. Then you'll be able to actually go in and look at a screenshot that looks similar to this. It will give you your loan details, and you can go in for each individual loan that you have, and you'll see a screen that looks like this. Now, you'll see here, it gives you all your repayment, that you're on income-based repayment, what your term is, your principal balance. But down here in the bottom, you'll see where it says, this is the amount of qualifying payments you've made. This is the amount you have remaining. And then this is your eligible date of eligibility. So what happens is these will not, like when you make a payment after that, these won't update until you submit your ECF that next year. So if you submit an ECF and then 2 or 3 months later, it's still saying 16 payments, don't freak out. That just means you have not submitted an ECF yet. So every 6 months to a year, when you resubmit that, all of that information should update to your most recent payments. All right, and then as I mentioned, this is the application for forgiveness. It does look very, very similar to the ECF. So be careful whenever you're submitting these two that you got the right form. This is what you will submit once you have hit 120 payments. This is just my personal recommendation because this is what I've seen people have success with. Before submitting the application for forgiveness, make sure to submit another ECF to get a confirmed, yes, you've hit 120 payments, and then submit your application. And that way it will make sure that you have less chance of getting denied. So some additional tips, just to kind of help you make sure that you're not getting denied. And I've said several of these, so forgive me for repeating myself, but they're very important. Make sure you're using the Public Service Loan Forgiveness Help Tool today. If you want to wait until the end of September, once everybody's loans are back out of forbearance, you can do that as well. But you can at least get a good idea going forward if you use it today. Once your loans have been switched to Fed Loan Servicing, you will resubmit that ECF every 6 to 12 months. If you take nothing else away from this, make sure that that's it. Because that is vitally important to make sure that you are getting all of your payments counted. And if for some reason there's a problem with your payments, you're catching it before you get way too far down the line and you can't go back and fix it. Keep a folder, either physical or virtual or both, with all of your documents relating to your loans and relating to your ECFs, relating to your income-based repayment certifications, all of it. I have a physical folder as well as I have a Google Drive folder to make sure that I have every single documentation. I have every letter that I get from Fed Loan Servicing that's saying these XYZ payments qualify. I even saved the letter that they sent me when they sent a letter to everyone that was on Fed Loan Servicing that said, this is what the CARES Act says, you're going to get a you know, forbearance for the next 6 months, and all of these payments will count towards public service loan forgiveness. And I saved that to make sure that if something happens down the line and they're like, oh, well, these payments don't qualify, I can show them the letter. Well, I was told that they qualify. Here's your documentation. So make sure. Going along with that, document everything. It's tedious, but just as in a lot of things, you are your own best advocate. So if you're wanting to get public service loan forgiveness, make sure you are documenting everything. If you are talking to your loan service provider, make sure you're getting the rep's name and their little rep ID, and write down what you've discussed and keep that in your folder. So if there's ever any dispute, you have all of that information. And as I mentioned earlier, try to submit one more final ECF before you submit the application. This does slow down the process a couple of months, but what it'll do is it will verify before you go through trying to apply and have to go through any kind of forgiveness, have to go through any secondary program or get denied. It will verify that you have 120 payments. You can check out the FAQs on the studentaid.gov site. That is the direct link. And I have a bunch of links that I will give you guys at the end of this presentation. And then if all else fails, you can call Fed Loan Servicing and speak to a public service loan forgiveness specialist. They have a bunch on staff, and that's all they do is deal with public service loan forgiveness. So just a reminder, steps to take: go in, submit employment certification, your loans will get transferred, resubmit your ECFs. Once you've hit 120, fill out the application, and then they will go in and review. They will say yes or no, and then they'll give you next steps. So I'm going to talk very briefly about what's called the Temporary Extended Public Service Loan Forgiveness Plan. What happens with that plan is that if you are denied for some reason, say you were on a graduated repayment plan and you didn't know, it gives you some options as far as how to go about trying to get forgiveness, even though maybe you had something that didn't qualify. I put the link down there at the bottom, but I do also have the link in my resources at the end. So we're going to kind of move forward on this. But this is an option for some people if you've applied and gotten denied. All right, a little bit more about that. It is, again, only direct loans, just like regular. Okay, so here are some resources for you. I am going to copy these into the chat, or I'm going to try at least. I'm going to put these into our chat box here so you can copy them if you. I will also send these around so these can get sent out with the recording of this. What questions do you all have for me right now? Okay, awesome. Looks like we don't have any questions as of this moment. So what we're gonna do, I have put my contact information up on the screen. So if you think of something that you maybe were confused by, or you kind of have some time to sit and think about all that information, because I know that that was a total information dump for you guys, feel free to send me an email. We are still working remotely at the Regents. So if you call my office phone, you're gonna get my voicemail, but it does forward to me eventually, so I will call you back. But if you need an answer right away, make sure to send me an email. That's going to be the fastest way to get a hold of me. Thank you again to Citizen Potawatomi Nation for having us do this series and repeating this particular topic, because it is very important, and I know a lot of people usually have questions. We appreciate you guys. I appreciate you guys for taking an hour out of your Friday to sit down and listen to me talk about this. And have a great day.